one of the things that all four of us have said is that one of the reasons why we're invested in Tesla is that we see Tesla as one of those companies where a stock is flat for a long time, lots of gyration up and down, but at some point there's a big narrative change that happens. It has happened 3 other times in the history of Tesla stock, and there's a huge pop. We don't want to miss that. Tell me what those kinds of things could be. What kind of Tesla catalyst, true catalyst for the stock that can happen that can then overcome this idea that if I model out the earnings that it's going to be depressed and there might be some additional price cuts, they need to invest in gigafactories, and therefore I don't see the EV growth happening more than 30% next year, and that's just not, the stock is built on a 50%. What a story could happen that could really just totally change the narrative. So why don't you start with you, Alexandra? You say this a lot. Sometimes you feel FOMO, like you're concerned about the stock because I don't want to miss it when it pops. What exactly could happen that makes it pop?
I don't expect it to pop this year, next year a lot. I'm happy to take it if it does, but that's not my main scenario. My main scenario is 2026, 2027. But what could happen this year is FSD. And with FSD, I really would like to hear from Tesla their business model on FSD. We have heard Elon answering my question in last shareholder meeting saying FSD is going to increase car margins to 80%. We all know that that's part of the story. You can't get a below 20% car margin to 80% just by FSD revenues. That's not how it works. I think what he means is there is going to be a recurring income that is an 80% income bringer, because obviously FSD is written and has been expensed. And so there's a high margin on that one, but it's not going to pull the whole car market, the whole car margin from 20 to 80. Or if it is, please surprise me. That would be the first one. I'd be happy to open the champagne bottle. So the one that I think is the closest today is FSD. FSD working smoothly. Tesla considering it, qualifying it as something else in level 2. I hate those qualifications, but it is. We have to work. We have to work with Wall Street. We have to work with Nasdaq, and we have to work with some people that just see it the other way around. So for me, FSD is this year's catalyst if they present it as a business model that works for Tesla and that works for the user. What do I mean? I do believe $12,000 purchasing price for a car purchaser is too high for a regular retail user, but it is too low for somebody who wants to use this as a commercial taxi. So there have to be 2 cases for that, probably bringing down the retail client price to something more affordable, even to something that could just be in the price of a typical option, saying $3,000 for the car. But on the other side, the one that does a taxi business out of it should purchase it as a price as if he would purchase a taxi business. In my job, I do a lot of business valuations, and a taxi business, you quantify the price for it at about 35% of annual revenues. So depending on what you think this robotaxi is going to make, 35% should be the price for purchasing it. So those are the parameters Tesla needs to discuss at one moment. The monthly subscription will stay at $200, will become cheaper at $100, which I think would be encouraging, just to really load up on the number of users. And then also how it expands. In China at the moment, BYD has the level 3 license since June or July last year, so about 6 months. There are a couple of others that are already running on level 3 licenses. Tesla hasn't gotten their license yet. So that's another market that Tesla can explore. So it would be great to have V12, not beta version, and the China license as catalysts. So for me, the 2024 catalyst, the closest ones are FSD. The second one is actually energy. Lots of the energy that we have seen accounted for in 2023 will have additional tranches that are coming into the financials this year. So I think people can be very surprised on how quickly energy will rise. So that could be another good catalyst, because lots of analysts don't have energy at all in their pricing yet. And then the third one, the biggest one for me, is once version 12 works, is the fact that other car makers are giving up on their FSD
autonomy
technology, whatever, and are going to license from Tesla. I think that is coming for two reasons. The best software obviously is Tesla's, but the most promising competitors are all Chinese. And my theory is that in the United States and in Europe, the governments are going to influence the car makers to not put Chinese software, full self-drive software, on cars that are running around in Europe and in the United States. The same issues we had with the Huawei phone issues and whatever. And then the European legacies and the American legacies will have to make a choice. Do they propose FSD versions? And if so, and we're talking about cars that will be in the roads in 2026, 2027, and so team up with Tesla as of this year. So those are my three biggest catalysts for this year.
Love it. Thank you so much. That's well spoken. Xander, what do you think could make the stock pop? And when I say that, it's more than 10%, right? We're talking 20% or higher.
Yeah, I thought Alexandra's points were very logical, and I had some questions written down that I was going to say, which is, can energy spike EPS more than analysts are expecting for 24? And I asked that question to you, Jeff, in your thinking. But I think that the market is forward looking. The analysts, they're looking to see when will Tesla grow. And for me, it really is there a sector change for Tesla? Will they be considered an AI company? So if FSD and Dojo connect and they start displaying the bot and showing what its capabilities are, and Alexandra's point regarding actually, Elon having a vision casting and explaining it, super simple. Here's the business model, specifically, not just very broadly, that can, cause that tipping point to where there is this FOMO, right? We talked about this over the previous shows. Where is that FOMO that, like, as you asked me about options, Alexandra, I'm currently not afraid of the stock running away from me. So I sell calls and I sell puts. Because I don't think it's going to fall either. I think we've had the majority of the fall, and clearly the market thinks that, yes, it's a high valuation, but of course, the optionality of all of these catalysts, they can really come into play. And energy is for me the important one. I go back to thinking about the basics and the fundamentals of what Tesla is. And, it's energy generation, right? Storage, and then deployment. So where are they going to, what products are they going to roll out in the future that we haven't even considered yet? So those are the main things that I think about with the catalyst. I think ultimately it's just, you have to get the market to fear that the price is gonna skyrocket because they are an AI company. So is 80 PE too low for for the current earnings? Well, if you look at future earnings, then it's possible that very quickly that PE will drop.
Okay.
Yeah, I think Jeff, if you're thinking of AI companies and you see NVIDIA in the 20s, high 20s for PEs, I think, when people are looking at it, they do start tagging Tesla as an AI company, the first stop for money, I think, is going to be NVIDIA, to be honest. So we have to be careful with this. I love the comments from Alexandra and Xander about, the business model. And I think Tesla has to articulate that, because before the supercharger announcements, there really wasn't a supercharger business model conversation with investors of like, this is what we're going to do. We're going to open up the charger base. We're going to massively increase utilization of it. we're going to massively increase revenue and we're going to take our cost structure down further and win all these new partnerships. I don't think that was ever discussed. And I think that would have been, it actually came out the other way. It came out that like Tesla's not asking us for anything and we just get access to it and we buy a connector from them. So it can't be like that. It can't be like that kind of like, rollout.
Excellent point.
I think it's got to be something along the lines of like, we produced network infrastructure, computer hardware, and software. We have we're the only company on earth with the end-to-end solution. It's running in 6 million of our robots right now, and we have a massive lead in data. So you're saying like, what are the catalysts that would drive the stock? One would be an FSD licensing agreement, because a company would need to start now to be shipping in 2027. And companies have to be making these decisions very soon. You saw this wave of capitulation over the last year, several AI or several autonomy startups just folding, and you're watching Cruise really come under pressure right in front of our eyes, one of the biggest in the US. So those decisions have to be made pretty soon. So I would be looking for, in terms of a catalyst, I would be looking for FSD global expansion and FSD licensing to be very big, because then the Tesla stock conversation really starts transitioning to more of like, well, this isn't an auto business. This is more of a sum of the parts conversation. You get back to AWS and Amazon, and you get back to Microsoft. You get back to these conversations of like, wow, this is a much bigger thing than just selling cars. They're selling the charging solution. They're selling the autonomy solution that every car on the planet is going to need. And it looks like they have the lowest cost to serve per mile driven of any of these other solutions that are out there when you really start digging into the metrics. So FSD expansion and FSD licensing to me could be a plus 20% type catalyst or more to the stock. In terms of Optimus, I think it's just going to be another year of significant, meaningful progress. Even if a couple of them go in the factory and start doing some material sorting or moving boxes in the warehouse, that would be great. That would be a great milestone for Tesla. But the commercialization of this, where it actually starts taking a meaningful amount of headcount out of an operation, I think we're still a little bit of ways away from that. So I think we're going to be waiting a bit on Optimus. I don't see us starting up a robotaxi business in the next year. The other big catalyst would be is if there's an unveiling of the 20. My third would be the unveiling of the 25,000 or sub 25. I hope it's less than $25,000, to be honest with you. I hope it's something like 22,000 or something less, where they can bring that cost structure down meaningfully. Because then that just, to me, that changes the whole trajectory of the company. That means they're going to launch a platform that can have as much production as all of their entire current production put together. And when you do something like that as a company, you change your what you look like to the supply base, what you look like to partners that serve you, and what you look like to the investor community are just two completely different things, because you basically just doubled your key core business by introducing this one product line and showing confidence that you can ramp it. So if they show a vehicle that's very desirable that people want, and then they describe the fact that it's going to be in this unbox process, it's going to be easier to build, it's going to be faster to build, it's going to be less greater output per square meter than any car built in history, greater velocity to build through the factory than any car in history, and they really properly roll it out, which is the way they're actually developing the vehicle now. But if they give it its due and tell us when it's coming, then analysts can start to price that in, and then I think it's off to the races.
That's actually a good question, if you don't mind, Herbert, me asking you. When we initially heard about Mexico a year ago, it was supposed to be the quickest built factory ever, 6 months. Okay, now let's just call it 12 months, because first of all, we're already 6 months late, and then who knows what happens. But let's say 12 months. So by the end of this year, we should have Mexico ready. Which cars are going to be built in Mexico? Only the low cost model, or do they really want to build all models there?
Well, if I'm Tesla, I want to bring up Mexico on something that's proven. So if the 25K car is proven in Austin and it's stable, then I have less of a problem bringing that up there. And if I purposely design the first phase of that factory to be all unboxed, then I'm going to be built. That'll be the first vehicle I build there. I'm not sure you're building all products there, because now you're introducing a level of complexity that may be unnecessary. If you can do all the world's S and X volume out of Fremont, then just keep it there. If you can do all of the if you can do all of North America's Model 3 volume out of, then keep it there. Unless you've got a plan for Fremont. If you have a plan for Fremont where Mexico ramps, Austin ramps, and then you don't need Fremont, well, then that's a different conversation, because then I think you would consolidate into Mexico and Austin. But I just think the introduction of this vehicle completely changes the landscape of the company. Not only because of its cost target, but because of its volume target. It's actually going to allow suppliers and allow partners to get to the price target they need to get to organically, versus it being this challenge thing of like, yeah, we're going to go after this thing, we're not sure it's going to work or not. I mean, it's a pretty proven recipe. There's a lot of data. There's a lot of elasticity data that would show if Tesla gets down to that price target, they're going to sell a lot of cars.